Good morning, everyone, and welcome to the VectorVest International User Group Forum. My name is Glenn Tompkins, Senior Stock Market Strategist for VectorVest. I will be filling in as your host today in lieu of Rick Franklin. If you can hear me loud and clear, please respond in the affirmative, preferably with VV Nation, to let me know that I am coming across loud and clear. And as I've seen people come into the room, there's a lot of people here so far. That's a beautiful thing. This is one of the most widely watched live streams that we have every month, and thank you guys for making that so. It seems like you really, really like having this, and we like doing it. And it's not very often that I'm here, but I'm glad to be here. YouTube is my home when it comes to VectorVest anyway. So thank you for allowing me to host today. And hopefully I will do well in lieu of Rick Franklin, who's really taken off with this user group forum online every month. So please make sure your computer speakers are turned on to hear the audio portions of this webinar. It seems like I've already asked. You guys can hear me. And the recording will be archived on the VectorVest YouTube channel and available right after the webinar. So if you don't catch all of it, you can always go watch the recording. And I will ask, because it is YouTube, please share this content. Let people know what we are doing here on VectorVest. And if you're new to the channel, this is your first time here on the YouTube channel watching this, folks, don't forget to hit the subscribe button. We've got a lot of great content on the YouTube channel, and this is the only way for us to grow, is that you let us know that you share it with other people. And most of all, if you like what you see today here, hit the like button. All right, let's get a lot of likes, let's get a lot of people, and let's help ourselves to grow. As we move forward, though, I've got a quick disclaimer. Everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own market decisions, and these decisions are yours and yours alone to make. All right, so let's talk about the agenda for today. Again, I will be your host today. And real quick, after that, I'll do a global market forecast for all of the different VectorVest programs that we have. We're going to primarily look a lot about what's happening in the Canadian market, but we're going to cover all of the markets for you today. And real quick, we're going to bring in, just so you can see, our keynote presentation will be done by one of my favorite people here at VectorVest, Todd Shaffer. And he's going to be talking today about the prudent approach that he uses to make 19%, that he used to make 19% in 2023, which is by far not just a stone's throw into the water. He's got a lot entailed behind it, so you definitely don't want to miss that. And guess what? Todd's got something special to talk about today, and guess what? It's not about a sales pitch, all right? It's not a sales pitch, so you're going to really want to stay to watch that. He is the manager of research. And at about 12:30 or so, we will adjourn. And again, the recordings will be available on YouTube immediately after the webinar, the same location on the VectorVest YouTube channel. So those were some things that we needed to cover. And what we're going to do now is start to get into the analysis globally of what's going on in the market. The beautiful thing about VectorVest is, primarily we have the majority of the stocks in our database are from the U.S. market, but we track over 15,000 stocks globally, to include the U.S., to include Canada, the EU, and Australia markets. So we're going to go over all of those different markets. So for y'all who are tuned in from all over the world, and I love the imprint that we have on people globally. Well, we track global stocks from all over, but we want to make sure that everybody's got an opportunity to make money. So let's getting into the slides. Let's talk about what the VectorVest composite is doing in all of the countries, starting with the Canadian market. You know that the VectorVest composite is doing well in the Canadian market, by far the best. It's up over 2% year to date. up over 2% year to date. But as I look at the Canadian color guard, the extended version of the color guard, there's a lot of volatility going on in that market. A lot of green lights in the color guard pricing column, which is a good sign because the price of the composite is moving up higher week over week and day over day. So a lot of green lights in the price column, but we do have red lights popping up in our other indicators, such as relative timing and buy to sell ratio, but back and forth. And the guidance is VectorVest does advocate caution in the Canadian market in buying stocks at this time. Well, that's because of the red lights popping up in the buy to sell ratio and the relative timing. Looking at the buy to sell ratio, the amount of stocks getting buy recommendations in the current markets, pretty stable going over the last 3 trading weeks from 0.8 still at 0.81 overall. Looking at the MTI, pretty stable as well at 1.17 3 weeks ago compared to 1.19. Primary wave is up. The MTI is above the value of 1, so the underlying trend of the market is up. The confirmed call is still up. So we go down below, all of them are green. The confirmed calls, the DEW, the green light buyers, and the primary wave. So we got the caution because of all of the yellow lights that are showing up. But overall, all of the major calls in the Canadian market are saying that it's okay to buy stocks. The MTI is not at a level where the market is looking oversold just quite yet. So I am of the mindset of why not just take what the market gives you. With yesterday's activity, we finished 1 tick into the red, but I am concentrating on the price of the composite. That is a lot of green, but not confirmed by the green light buyer kicker. But so we're not looking at the kicker. I don't even know why I brought that up. I'm looking at the green light buyer, the green lights in the color guard price column. All of the major indices are up. All of the major market timing calls are up. It's okay to buy stocks, but do it with caution. So it's still of the mindset of taking what the market gives you. Ray is in the background. Thank you for that, Ray, as a moderator this morning to help you to answer the questions. I am tracking the chat as well, so we can keep to see what's going on. All right. Good morning, everyone. Basil is here. I see a lot of people who are normally on our YouTube channel tuning in this morning. Looks like we've got 411 people watching. And I am, again, Joey, if you can do me a favor, put the link in the chat so that people can share this live stream with people in their social circles so that they can see what's going on. And he just pinned it to the top. So if you can, for real quick, we got 406 people watching. Share this real quick, and let's get a lot more people into the room. So from the Canadian standpoint, up over 2% overall from year to date. That's not half bad. And actually, it's one of the best countries that's working right now from the VectorVest composite, the VVC composite, VectorVest composite. That's the same thing. I just repeated myself. But for the VVC, up over 2%. Let's move over to the American market. Not nearly as strong, up about 0.5%. A lot of things going on in the U.S. market. And the Canadian market tends to follow behind the U.S. market. But it looks like right now, from the price movement of the composite, Canada is leading from that perspective. We're only up about 0.5%, a lot more yellow than red in the U.S. market. But again, we track a lot more stocks than we do in the Canadian market. It is what it is. As I look across, the VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. As of the close of business yesterday on February 2nd, we are 1 tick into the green, as opposed to in the Canadian market being 1 tick into the yellow. The charts that Glenn will be showing are viewable on the market timing graph. These slides are not posted in the software since the data changes daily. Thank you for that, Ray. Good morning, Uncle Glenn. That's Amir. Hi, Amir. Amir, I just need you today to just listen. Just listen. Everything's going to be okay. All right. Looking at all of the calls in the U.S. market, also all in the green. The confirmed calls, the DEW, the green light buy, and the primary wave. Witt says, I get confused by the color guard. One day, VectorVest advocates buying. The next day, it's say, don't buy. How should I look at this? So this is why, Witt, we are looking at a 3-week view of the colors in the color guard that track the price DRT and the buy to sell ratio. Every day, it could change. But what I'm explaining to you is the overall picture of what you should be continuing to watch in the market. Does that make sense, Witt? All right, yes, you're right. Every day it could change. But what is the overall feel, whether it's in the Canadian market or in the U.S. market? As I look at the MTI, not at the level of being oversold, overbought again, on that level of 1.34 that we closed at yesterday. When the MTI gets to a range of 1.5 to 1.6, the market is considered to be overbought. We are not at those levels in either country, all right? So when we give the data every day, that's designed with to prepare you for the next upcoming trading day. But the reason why we're looking at a 3-week or so view of the color guard is to give you a real true semblance of what's going on in the market and how to invest in the market currently right now. So Witt, does that answer your question, all right, in regards to how you should look at this? Hopefully it does. All right, so that's on the Canadian market. That is on the U.S. market in regards to what you should be doing. How many of you watched the special presentation yesterday? Just type a 1 in the room if you did. Type a 2 in the room if you have not. And I think that the strategy last night for both the Canadian market and for the U.S. market is a great place to be in regards to knowing that the market is not overbought yet. A great way to invest in the market. I see a lot of 2s in the room. Goodness gracious, golly gee willikers. You guys are doing yourselves a disservice if you're not watching the weekly presentations. The weekly presentations are really designed to keep you abreast of what's working in the market right now. I am not the only one that does this. Everybody in the education department has an opportunity to present to you the special presentations. And we do the work behind those special presentations every week to bring to the forefront ideas that you could be using no matter what the market's conditions are. We present the special presentation based on the current market's conditions. Now, a lot of you will turn around and do a lot of testing behind it. Totally understand it, and we welcome it. But keep in mind, when we do a special presentation, it's designed to help you in the most recent current market to help you guys use the power of the VectorVest software to make money. So for everyone who did type a 2, I invite you that after the International Forum, go check it out. I will talk a little bit about it today because I think it's nicely in tune with what's going on in the market. All right, so once I get to that point, I will show you what we did last night in the special presentation, but I do invite you guys to watch it as well. Philip says, you asked if we watched it last night. Philip, you're right. So if you did, my question was, if you did watch it, type a 1. If you did not watch it, type a 2. And that's why I made mention there was a lot of people in here who did type a 2, and I am inviting them to watch it. All right. I also learned not to be greedy and take profit. When I make 20 to 40%, I take profit. Thank you. That's what it's all about. All right. We're going to help you no matter what's going on in the market's conditions. How do we find you in YouTube? Jay, you're looking at us right now on YouTube. You go to YouTube, search for VectorVest, and if you haven't subscribed to the channel, Jay, do that. Subscribe, hit the bell icon so that you'll be alerted when new videos or live streams come out. All right. It's challenging for me to buy stocks like NVIDIA or Meta, given how hard they have run. VectorVest is good to buy, but technically they are overbought in the short term. Good question. Good statement. So stocks may be overbought because people are jumping behind the stocks because they've done so well. And just because a stock is overvalued doesn't mean that it's a bad stock. It just, overbought or overvalued. I'm going to say overvalued. It just means that people are willing to pay a premium to own the stock. If a stock is at a point where it looks like it's overbought, but the market is still moving it higher, I'm going to tell you that you can still take advantage of it. But what else are you going to do behind that trade? You're going to put a stop behind it and make sure that if that stock does pull back and pull back hard, you're protecting yourselves, but you're not limiting yourselves on the ability to make money on stocks that are rocking and rolling. Does that make sense, Whit? I totally understand not feeling comfortable with stocks that seem to be overbought. But if the stock is moving, you don't want to lose out on the opportunity to make money on it. But because I know the stock is overbought, I will put a tight stop on it. All right. So hopefully that makes sense as well. All right. Let me go to the other two markets real quick. We look at the EU and we look at Australia. There's the Australian market. Look, up 1.34% year to date. Not bad. Let's go look at the color guard, how it finished yesterday. VectorVest does advocate buying safe undervalued stocks that are rising in price at this time. We finished with a green light in the color guard pricing column on the Australian market. Interesting, as compared to the U.S. market, it's got a lot more red in it. Not a lot, but more than the U.S. market, but still a lot of yellow. Folks, when you watch the 3-week view of the color guard, again, a big presentation about what's going on in the market and where your money should be. So on the days we've got the green lights, it's okay. But overall, what's the feel? Caution. We finished with the green light in the color guard pricing column. So we got one tick into the green, but I do see it surrounded by a lot of yellow and some red. When I look at RT shows me if the market is going higher or lower. Over the last 3 weeks, though, stemming from 1 to 99, 0.99, as low as 0.98, it shows me that these yellow lights are being backed up by the market stagnating a little bit. All right, so RT lets us know when the market is in an uptrend. Notice that over the last 3 weeks, it's only been at 1 once. 99, 99, 99, 98 twice, 98 3 times, 97 once. The market is stalling out. But we did have a green light in the color guard pricing column yesterday. The MTI, or underlying trend of the market, is still above 1. The primary wave is up. The underlying trend is up. The confirmed calls are up, as you can see. So far, 3 out of the 4 countries we looked at, it's still okay to buy stocks. But when I look at all of this yellow, I'm going to be a tad bit cautious. Randy says, loving the access to the U.S.-based Mag 7 stocks through Canadian CDRs. Gives me access to high-dollar stocks at lower prices. Randy, we aim to please the best way that we can. All right, let's move over to the last country, which is the EU. Again, another country where we finish one tick into the green. The color guard is mildly bullish. Notice, in the EU, no red lights over the last 3 weeks. All right, yellow, primarily yellow though, so still caution, but we've gotten days where we have had a green light in the color guard pricing column. Look at the MTI though. In the EU, we are getting to the level where the market is getting a little bit overbought. Now, that's the only country that's got the MTI in that level. I'm looking at possibly being very cautious, knowing that once we get into that value of about 1.5 to 1.6, the market is looking for a top. Keyword, looking for a top. Just because we hit those levels doesn't mean that the market turns around on the dime and we start moving down. But I am letting you know with the power of the VectorVest software. Remember, the MTI, you can't find it anyplace else. All right, you can't find it anyplace else. Thank you, Glenn, for January 2024 pick stocks up 25.43%. Good, googly moogly. And again, for all of those people who were not subscribers to the channel, folks, comments like this is what it's all about. That's why we need to have you subscribing to the channel. We want to help everybody. We want to help everybody. So it's not just about the international user group. It's about being able to spread the word of the power of VectorVest to everybody. All right. Raphael says all indices seem to be overbought. making new highs. Risk outweighs rewards. Why buy? Well, I remember when I said about looking at the color guard, looking at the 3 weeks, getting a good view of what's going on in the market. If these indices or stocks are running, I don't want you to lose out on the opportunity to make money. Now, if you're not comfortable with that, I totally understand. And maybe you don't partake in that. Maybe you don't partake in that. And that's fine. But when we're at levels for the other 3 countries where we're not looking for a top, that tells me that the market does still have some upside potential. Do you want to miss out on that because the market seems to be overbought? I totally understand that. But if the opportunity presents itself, why not take it? And how about this? Wait, maybe if you take these trades, you take a half a position more so than a full position. If you normally invest $1,000 in a position, maybe during this time, because the market still has upside and you still feel that the market is overbought, maybe you put on half a position. But also with that, you put on a tighter stop. Does that make sense, Raphael? Think of it from that perspective. The market, take what the market gives you. And if the market is giving you some more upside, I'm okay with that. But if you're not, then you don't do that. And you wait for a better opportunity when the market is not that way. I'm going to take one more question. Glenn, which country's stock market is expected to do better in 2024? I'm not sure how to answer that question because each country is different. I don't know which one is going to be the best for 2024. So the best way I can answer that question is no matter what country you're in, you use the power of the VectorVest software to find the best stocks in that country to take advantage of. I don't know if we need to have a competition about which country is going to be the best. Rather than, no matter what country I'm investing in, why not give me the power to get the best or the most out of that country? Does that make sense? Who just asked me that question? Shafi, does that answer your question? I don't want to have to make a competition between which countries are better, rather than which countries, by way of the VectorVest software, can I make the best money? All right, let me keep moving. Because let's go take a look at the market timing graphs for each one of these countries. We are looking at about a 1-year graph on the U.S. market. All right, there's that level of a 1-year high on the market, and we're trading near that. But as I look at the VectorVest MTI, the MTI is saying we're not at the level of looking for a top yet, but I am looking at the power of the market timing graph to say, well, I can see we're in a little bit of a channel and we're towards the upper edge of the channel. I'm looking at the MTI, the buy to sell ratio, and the RT. You know what else would I see? I see those indicators falling. All right, I see the divergences between the market going up and these indicators falling. I think that helps to back up a lot of the yellow lights that you see in the color guard. See, everything, you put everything together, it becomes full circle in the information that we're giving, not just data, but the information that we're giving, because that answers the question about, well, how do I use the color guard? Well, the color guard has got all that yellow in it, but I look at a market timing graph and see these major indicators falling. That's a bearish divergence. Let's go take a look at the Canadian market, also sitting at a 1-year high. But I also see the divergences here. I do see the Canadian market above its 65-day moving average. That's a good sign to be in the market. But as I watch, as we're getting towards a 1-year high, our indicators falling, that's another bearish divergence. Let's move over to the Australian market. New high over the last year, above its 65-day moving average. The indicators are also falling as well. So now, out of the 3 countries we just looked at, we see ourselves hitting new highs, and then we also see the MTI, buy to sell ratio, and RT all trending lower, a bearish divergence. And of course, the EU hitting a new 1-year high, not as big a divergence on MTI, but still there, bigger move on buy to sell ratio. And this is important when I'm looking at stocks moving higher. This tells me if the market's moving higher, how many stocks are taking advantage of the rally? And when I see a pullback as a bearish divergence, the market's still moving higher, but the amount of stocks becoming buy recommendations is falling. RT is falling. We're losing momentum on these stocks as the market is going higher. So all four countries may be hitting new highs over the last year, but backing that up with our major indicators are all showing divergences across the board. So who was the one that asked me about utilizing the color guard? Hopefully this adds more credence to the value of the color guard as a bigger view over the last 3 weeks. Now, let me ask this question. Does this make sense to everybody in the room? Looking at the power of the color guard and looking at the market timing graphs in here as well. Type a 1 if that makes sense to you. Type a 2 if I just confused the heck out of everybody. All right. This is why we have the forum, and this is why we do a deep dive into all of the countries that we track, along with looking at the market timing graph. Folks, this is why you pay for a subscription right here. Gerald says 2. Sorry about that, Gerald, but I want to look at the majority of the people in the room. And, Gerald, if this doesn't make sense to you, I will invite you to call our product support staff to help you out to answer any specific questions that you have. But as I look at the majority of the room, I see the ones coming across. Glenn, you talk lots about candlestick patterns. Can you suggest a good book on it? Actually, I'm going to send you to a website. Actually, we talk about it. We've got a course that talks about it. Before I even send you anyplace else, it's self-contained here within the VectorVest software as a coaching group where we have a candlestick course. We got a candlestick course. You want to learn more about it? Before I send you away from VectorVest, take a look at that course. Take a look at that course. All right. And guess what? I think BJST1 just wanted to help out with Gerald and put a 2 in the room. But if you're having questions, deeper questions, specific questions that I may not be able to address here right now, give our product support staff a call to answer any specific questions you may have. All right. Let's talk about the essays around the world. In the U.S., we had Let the Trend Be Your Friend, tips on how to use the VectorVest system to help you stay on the right side of the market trend, which is always important. Stan wrote the essay called 10 Bagger Stocks. I just did a video on the YouTube channel about multi-bagger stocks. I love that Stan, I don't know if he piggybacked off of that or he already had this in mind, but I think finding low dollar stocks that have the ability to multi-bag is huge. How to use the VectorVest to help you find potential 10-bagger stocks. Folks, if you hadn't watched that, you need to. You say over the last 3 weeks, but only 12 days are shown. Is it? It's close enough, though. I always round it up. 12 days. I'm just 3 days short. Carl, it is. It's close enough. It's close enough to 3 weeks. All right, so maybe not exact, but it's close enough. It's more than 2 weeks. May not be quite 3 weeks, but it's close enough. All right. Stan has the link to the video he created in the Canadian views from last night. Thank you, Ray. In the EU, Susan Hayes Colton did Green Stocks Part 2, a continuing series of how to use the VectorVest to find and analyze green investments. And Robert and Russell Markham for Australia. Australia Portfolio Challenge 3rd place, which means that next week should be 2nd place, and then the week after that should be 1st place. A review of the top performers in the U.S. Australian Portfolio Challenge. All right, before we get to Todd, I'm going to do this real quick. Let me see. This is the U.S. market. For those of you who did not watch the special presentation last week, it was called, for this week, was called Safe and Sound Stocks. All right. What I did is I found it under search as Prudent, Safe and Sound. I went in deep detail of what made up the search. I went back to the last confirmed up call on 11/24 of 2023. I ran the search of these stocks with these great characteristics, only found in VectorVest, by the way. I did a quick test of them all. Folks, safe and sound, easy. Over the last confirmed up call, 29.43% where the market went up, only 7.91%. So if the market still has legs to the upside, these are great stocks to take a look at. And if you didn't watch the strategy of the week, please do, because it goes into deeper detail on why these are such great stocks to keep your eyes on. Let's go do it. I did it also in the Canadian market. When was the last confirmed up call in that's the US? Sorry. Click on cancel. There's the Canadian market. I did the same thing. I went to search as Prudent, safe and sound. The last confirmed up call in Canada was 11/14. I ran the search. I did a quick test of the top 10 in Canada. Look at that, 16.1%, 8 winners, 2 losers, and still more than double the market over the time period. So I just wanted to touch on those. For those people who are in the EU and Australia, if the market still has legs to the upside, I want you to consider looking at stocks with high CI. That is the sound part of the safe and sound strategy that I did last night. The sound part is an indicator that will only be found in VectorVest called the Comfort Index, cast on a scale between 0 and 2, looking for stocks that in layman's terms go up more than they go down. They are resilient to long or lengthy severe price declines. And I think that if I'm looking for stocks that are safe and sound, that is going to be a key ingredient along with relative safety. There's the safe part of it. Jim Penna talked about relative safety last week, and I wanted to piggyback off of it for this week. And again, I love the idea of safe and sound stocks to be able to help you, especially if the market may still have some upside. All right, add dividends to the search. So, Jake, guess what? I know you guys will do some testing on that. I encourage you to do other things, add other things to make it more suitable to your type of investing. But the base search of safe and sound, I think, is a great recipe to be able to sleep well at night. All right, folks, that is my overview. Here it is. And I'm right 2 minutes over, Todd. I'm only 2 minutes over. And I think it's right in line with hopefully the job that Rick Franklin would have done for you this week. All right. Again, it was my pleasure. It was my pleasure to give you a presentation last night and to be your host for today. So with that, we're going to turn this over to Todd Shaffer, the manager of research, as he talks about the prudent approach that he used to make 19% in 2023. Todd, take it away, my friend.
Thank you, Glenn. And let's get technology caught up with us here first. And you owe me 2.5 minutes now.
Well, guess what? Hold your breath on that.
How's that look?
Looks good to me if you can still hear me.
I can. Now let me just see if I can get my Teams window to show again. All right, we'll run with it.
Okay.
All right. Welcome, everybody. Thank you. As Glenn said, I am Todd Shaffer, manager of research here at VectorVest and a coach and instructor for the successful investor methodology or approach to using the VectorVest software in a very prudent kind of manner. So before we get started talking about successful investor, the first thing I'd like to know is just kind of who's in the room. So if you are, let's do it this way. If you are unfamiliar with successful investor, type a 1 in the room. I'm hoping that, well, I don't know if I should say hoping, but I'm thinking that there will be more people in the room familiar than unfamiliar. But I have a little time delay here, so we'll get that going. Because what I hope to be able to do every time I talk about the successful investor methodology, it's an opportunity to reach out to not only VV Nation, but also to the larger investing community. And I do that with a purpose and a goal of helping you fix your portfolio if you're struggling at all, because we've all been there, right? And so for most of us here in the education department, right, the gratification of doing this work is having a positive impact on people's lives. So that is certainly why I'm here. And what a bevy of folks who are typing ones. So good. I hope that you'll get some good information here, because successful investing really is about pulling it back to the fundamentals, to the basics of investing. So if you've been struggling at all, it's a way to kind of do a little inventory check of what you've been doing and try to remedy the situation. Even if that means sometimes, maybe you're wired to be a little bit more of an aggressive temperament, but sometimes pulling it back to something more prudent, regather your system, and then accelerate back again from there. But the successful investor approach was originally designed by Dr. DeLito, the founder of VectorVest, right? And it's designed to be easy enough for the new investor to find success in just 10 minutes a day. That's the goal. And our objective is to outperform the market, which typically has averaged historically about 10%. As Glenn said, this year we're up something more like just under 19% for the portfolio. So before we get into all of that, as Glenn said, this is not a sales pitch, but I do want to show you what's possible by following the successful investor methodology, right? And it's not a sales pitch because I have nothing to sell. Those of us who are in the successful investor coaching group know that we are, for the first time, offering the coursework that underpins this successful investor methodology. We're offering it for free to all VectorVest members. So if you're currently a VectorVest member, you have free access now to the course, which is really starting, I forget the date now, but we'll start promoting it next week, and then we follow on, I think, the week after that. If you're watching on YouTube and you're not a member, then just go to vectorvest.com/YT, and Ray, maybe you can put that in the comments. You can get a 99-cent trial. Then you are a member and you can go to the course for free. So, okay, I guess it cost you $1. Guilty, all right. But anyway, if you are part of VV Nation, then if you have people who are kind of on your list of folks you'd like to help, right, pay it forward to them, kids, grandkids, friends, pass that link on, right? It's a great opportunity for folks to, let's say, get past some of the salesmanship that's kind of endemic to this industry and see the VectorVest way. All right, well, that being said, what is the coaching group performance, right? Does it work? So we've been teaching this methodology for over 30 years now, right? So if you've been struggling, this is the performance that we experienced over this past year using a very simple technique, right? This portfolio is actually a sample portfolio we use in our trading or our coaching room to demonstrate the principles and techniques that we teach in the course. So its purpose is not to put up a big number, right? Its purpose is to teach. And I'll be doing some of that today, right? That's my focus here. So I'll show you the performance details in a minute, but just at the surface level, we met and exceeded our goals, right? The portfolio is up 17.94% now, even though we pulled back a little bit here in January. But we're exceeding that goal of, in a very prudent way, beat that 10% threshold, consistently outperform the market over time, which, as I said, historically has been about 10%, just by applying our trading system, right? It's a very risk-averse approach. And the equity curve, this is what you want to see in your equity curve in the portfolio, is that it's going bottom left, upper right, that it's hitting higher highs and higher lows. Not that it never pulls back, because, of course, we live in the real world. You are going to have pullbacks. But over time, you have a system that you're executing well and are reaching higher highs and higher lows. All right. And how much volatility you have in that equity curve is more a product of your temperament, your tolerance, right? How much you want to see on how you manage that portfolio. All right. So my goal in this presentation is to help you understand how we got there, and by extension, how you can improve your game, whether you join our group or not. Right. So this will, of course, be VectorVest centric, right, using our tools, but the concepts, the principles are expandable no matter how you trade or what tools you use, right? So there's some universal principles involved here. Now, the system, as I'm going to show you here, is taught in two places in the VectorVest resources. First is the Quick Start course, and we have also a full course, which is the one I mentioned before that's going to be free, coming up here in short order. So the Quick Start course is found in the VectorVest program on the training tab. So here's a screenshot that I took out of the program. If you just go up to the training tab up here, this is the Quick Start course. And you can see from the timestamps why it's called a Quick Start course, right? If you watch the whole thing in one binge session, you can do it in about 90 minutes, right? So that's a quick overview of the system. But of course, to get that quick overview, you leave out a lot of details, right? When we started teaching this to our members, it quickly became obvious to us that a lot of folks wanted and or needed more detailed instruction. So we created the full course with Dr. DeLito's guidance, where we spend about 60 to 90 minutes on each one of those lesson topics, right? So we go much deeper into much more granular detail of each of these approaches. All right, and that's the course that we're offering. So obviously, I can't condense all of that information into 1 hour today, but I am going to present a hybrid where I can provide enough guidance to point you in the right direction to fix your portfolio. And that's my goal for today. Now, we also have tied to that, and the product of that portfolio I showed you is this coaching group that we have. So every Thursday we get together with our clients. We have a 24/7 coaching room, but we have a formal coaching session on Thursdays where we get together with our members and coach from the framework of the successful investor approach. Right. So I'm going to do that. You're going to see me do that today. Right. I'm going to answer your questions and your feedback from the perspective of a successful investor, right, from that approach. Because I know as a coach, people come to us at different places in their investing journey, right? Those just starting need to keep it simple. Those of us with more experience can handle some complexity if it'll improve results. Let's not just make it complex for the sake of being complex. But I've also come to realize that a lot of folks struggle to find consistent success because they never learned the fundamentals of investing, right? So even if you've been investing for a while, if you're struggling for consistency, I would humbly suggest and invite you to take a look at today's material and review the fundamentals of trading, no matter if you're an investor, a position trader, a swing trader, a day trader, right? The principles don't change, only the time frames and the techniques. So let's set the table. Let's revisit that sample portfolio I showed you earlier because I want to go a little bit deeper into its details. So remember, its primary purpose is to teach. It's not to demonstrate how big a number I can put up, right? In fact, it's closer to the opposite, where it demonstrates you can make consistent, reasonable gains without lighting your hair on fire and taking big risks. Okay, so with those disclaimers in place, let's take a look. If I can get this slide to advance. So I took screenshots of these yesterday afternoon of the portfolios. We'll go into the program here in just a minute. But here is the portfolio to current, right? It's up 17%. In fact, let me jump into the program here real quick. Let's take a look at it. So in the program, I'm going to go to the portfolios tab. Here is the coaching group portfolio. I can even move the toolbar out of the way. Right, so we peaked here in late December. I don't know if you can see that watermark. It says 20.03%. Since then, we pulled back to our current 17.77%. Right, but ultimately, Again, the things we want to look for beyond the number, right? Let's look at the equity curve. It doesn't go straight up. It has pullbacks. It has flat times, right, where we don't seem to make much headway. How much volatility is in that? Here's a flat line where we were in cash. So it advances and it retreats. But again, in that larger context, we're still hitting higher highs and higher lows. We're currently in 3 trades in the portfolio. So their returns so far, relatively flat. 2 down, 1 up, but not significantly in either case, right? And that kind of echoes the equity curve here is just kind of moving sideways here in the near term. Well, here is a thing called a portfolio summary report, which breaks down that the trading history for this portfolio. And the things that I want to focus here on are down here. The number of trades, and let's work with closed positions because I don't know what's going to happen to those open positions, right? They're down now, but heck, next week we could take off like a bird. So who knows? So we have 54 closed trades in what? About 15 months. So what, 3 or 4 trades a month? So it's not actively traded here, right? We're not aggressively trading. We have a winning trade percentage overall of 68%. All I have to do is all positions. There it is. 68%. And that's roughly equal on both our long and our short positions. We do short in this portfolio to play the downside of the market. Below that, we have the best and the worst trades in that time frame. We just closed out this CrowdStrike trade. That was the best trade of the year so far, gaining an $1,800 gain. But we also want to think about our average winner. So we want our average winner to be larger than our average loser. So when I have a trade expectancy or a trade performance where I have more winners than losers, and my average winner is bigger than my average loser, I have a thing called positive trade expectancy. So when you think about your own trading, are your winners outpacing your losers? Is your average winner greater than your average loser? If the answer is no, then that's a good indication of where we need to start, right? So measuring that performance can give you great insight where you need to improve your game. Here's a copy of that same portfolio with one difference, right? Glenn was talking earlier about how the market had started getting toppy, right? We made this copy in our coaching room because we wanted to demonstrate or explore how different approaches can work. So the market timing system indicated, let me show you on the graph. Let me go in there. Here's our market timing graph. The MTI crossed above 1.5. That's our threshold for topping market conditions. We crossed above 1.5 on the 13th of December. When that happens, the base methodology of Successful Investor says stop buying or stop opening new positions. Well, there's a yin and a yang to that, right? The good part of that is, well, if I stop buying new positions because I'm getting closer to the top, right? And so stop taking on new risk, manage the trades that I have open on their stop losses. But if and when they stop out, particularly on the pullback, I'm going to naturally extinguish the portfolio, get back to cash, and I have no risk in the market because I'm in cash. So at that base level, when you come back to the portfolio, that puts me in cash. I'm flatlining because I'm in cash, right? So I have no risk. Well, what's the downside of that? Well, the downside of that is if the market continues to rise, then I can't capture any of the gains. I'm sitting in cash. Right. Well, I want to take that opportunity to say it's not about guessing right whether or not the market's going to go higher or not. We're so focused on being right and predicting what's going to happen, and that's your mistake. I'm interested in setting up a system. We're interested in setting up a system that puts probabilities in my side, because I don't know what's going to happen. And if I can be in a position where it doesn't matter what happens, I have a game plan for taking advantage of what the market presents me, then that's the route I want to go. So one of the driving principles of successful investing is taking a look at things on the basis of probability, not on being right or wrong. It also takes the pressure off of you to predict what's going to happen. Right? So this other portfolio, we took a different approach, a more aggressive approach. And again, it's not whether it's right or wrong. We demonstrated in this portfolio, hey, market's getting toppy, but I still want to participate because it can continue to go higher for a while. But I also recognize that I'm closer to the end than the beginning, so I want to do it in a more risk-averse way. So we're still taking new positions, but we're taking them at half of their normal size. Now, this is a 10-stock portfolio, so each position currently would be about $11,000. I scroll across here, you see my cost basis is about $5,500. Right, so I have half positions. There's a yin and a yang to that. Well, the reason I took the half position is if the thing falls out from underneath me next week, and I hit my stop loss, then my loss would be half of what it otherwise would have been. So that's the positive, at least from this perspective, right? What's the negative? Well, the negative is if the market goes up from here, I'm only going to accrue gains at half of the pace I would had I taken the full position. What's the probability? Well, the probability of the reversal is higher because I'm at topping market levels. So I take the smaller positions. Market pulls back, MTI comes back below 1.5. When it starts rising again, I'll come back in with full positions until I get back over 1.5. Rinse and repeat. So this approach is a little more aggressive, where I keep buying into the market even though it's at topping levels, versus this approach, which is the base and more prudent approach of the base successful investor methodology of stopping buying altogether. Do you get the difference, the nuance, right? Which means even within our fixed rule set, you have a lot of latitude on how you want to adopt your particular version of the rule set, customized to your sensitivities for risk and reward, your sensitivities to adverse market conditions, right? Your investor temperament, I guess, is the bottom line. All right. So that theme runs consistently through successful investors. So what you'll see is that we don't put down hard facts of this is what you have to do. What we try to do is explore the concepts and the principles that have driven our decision point in our trading system. But once you understand the principles, as long as you understand the pro and the con of any decision point in your trading plan, make the best choice for your goals based on your analysis, right? And again, on the basis of probabilities, not on being right or wrong, right? Because we can't know what comes tomorrow. So this slide is the roll-up of that performance. And again, I can go back into the program to show this. If you go to the portfolio's home and then you go to the portfolio performance tab or button, here are the 3 open portfolios here. And so SI Coaching Group, that was our portfolio where we've been buying back into the market, even though we're at topping levels. This is the copy where we have now fallen back into cash. Notice that the gains are pretty much at parity, right? Because we only went to cash not last week on this coaching room, we finally stopped out of all of our positions. But even in this short time frame, you notice that the drawdown on the portfolio that we kept buying into is slightly higher than the drawdown of the model, of the copy. Either way, there are a couple things that come to mind, right? First of all, the more aggressive approach that we're taking has a drawdown of 3.9%. Let's call it 4%. If you can't handle a 4% drawdown, I humbly suggest you buy an annuity instead of invest in the stock market, right? So a 4% pullback, and a drawdown is the biggest pullback from the high to, the bottom of that pullback. So the biggest pullback we've had in the portfolio is 4%. Right? So very acceptable for most investors that I've come across. Right? And that's part of that volatility number. So even though it's a close sample, the idea is by going to cash, I'm more aggressively limiting that drawdown because I'm not taking on any additional risk in the fluctuating market. Make sense? Hopefully that draws or conjures a picture in your mind. Right? So which one was genius? Well, we'll figure out which one was genius once enough time has passed for us to have hindsight. Right? So again, it's not about knowing. You can't know. So you just want to be comfortable that no matter which way it goes, you have a higher probability of getting where you want to go. I guess the other way I'd translate that is some folks, if they were sitting in cash now, would feel like they're watching the grass grow, that they're being restrained, that they're being held back. All right, well then maybe you're a little more aggressive. If you want to keep buying into that rising market, that's great, but let's make sure we're doing it in a risk-averse way so that the probabilities are still on your side if it doesn't go the way you want it to. And that's one of the exercises you can do. Always look at the yang, right? We often change or chase our own biases of what we think is going to happen, and we forget to check what's going to happen if it doesn't. So let's apply this to your own portfolio. What's the biggest pullback that you've experienced in your portfolio? Was it too big? Did it trigger your fear response, right? Because when we get anxious about the portfolio performance, that's when we start making emotional decisions and the thing really comes off the rails. We also want to know that's kind of our max pain point, right? That pullback. What threshold? Right? If you're going to tell me that you go into panic mode if you pull back more than 5%, then I'd say, well, let's then take the more prudent approach here. At least when the market starts getting toppy, stop buying. Right? See, I'm going to nuance the approach to my own temperament. All right, so that's the paper portfolio and how we have been doing this past year. Let's talk about how you can fix your system to get closer to that performance, right? So if your system is broken or underperforming, I think you'll benefit from focusing on 3 topics that we're going to cover today that are driving that performance. First, we're going to look at the exact criteria that we want to use to pick the right stocks. And the right stocks, right, depending on your temperament, may vary a little bit, but we're going to take it from the successful investor perspective today, and then you can apply it if you want to be a little bit more aggressive or more conservative, right, if you're kind of a buy and hold investor, particularly looking for some income. We're also going to look at 3 keys to buy at the right time, and we're also going to talk about when to sell. Probably the biggest sticking point for folks, because that fear monster comes in as soon as you see 2 big red candles, you want to head for the hills. Right? So remember, the answer to these questions is not about being right or wrong. It's about putting the odds of success in your favor at every decision point. It's a probability game. It's not one about being right or wrong or predicting. All right, so this is the graphic we use to illustrate the successful investor system. The outer ring, right, is the 30,000-foot overview. It defines our goals, the techniques we're going to use to pursue those goals, and the mindset we want to maintain in that process. Right. So as Stephen Covey wrote, right, begin with the end in mind. That's what the outer ring is. The inner pie pieces, right, the pie slices here, are the trading system rules that we'll adopt in pursuit of the goals and the exercise of the techniques. Right, so those are the rules that serve the outer objective. They need to be symbiotic, cooperative. Right, so our objective for our portfolio is to outperform the market, right, historically about 10%, using position trade techniques with a mindset that is prudent, one of quiet confidence. And in fact, this system was set up so that we can do the maintenance of the portfolio after the market hours have ended, when everything's quiet, in about 10 minutes a night. And that's any time between 4:30 and 9 o'clock in the morning. Pick one. Right? So whenever the house is quiet, right, that's what I would suggest. You can set it up as a routine, maybe before dinner, maybe a couple hours after dinner, maybe 11 o'clock at night when everyone's gone to bed. Whatever you need to do so that this is an intellectual exercise for you, not an emotional one, and not one where you're competing between trying to keep your mind in the game and what somebody's yelling at you from the TV set. All right, so the inner pie pieces, right, are the trading system rules. So any trading system you use, whether you're prudent or aggressive or anything else, you'll have a rule set that tells you when to be buying stocks, what stocks you should be buying, and when to be selling them. And this is a circular pattern, right? It's a rinse and repeat thing. So when the market tells you it's a good time to be buying, we'll go look for stock to buy. When we sell it, we'll restart. Do I need to go buy another stock? All right, so that's the system, right? So when you think about it, what's different about this? Well, the industry's answer to those questions, right, set you up for 3 particular points of failure here, right? Buy any time you like, because you know what? The market's always going higher, right? The market always goes higher over time. So just buy any stock at any time. That's fine. In fact, in terms of what to buy, we'll buy stocks that have a good narrative. ESG, charismatic CEO, AI, right? We just kind of cycle through these narratives and we're supposed to all just go chasing, and we do. Look at the market evidence, right? We go chasing those narratives that the industry is putting out, and that industry includes media. And then when to sell? Well, actually, you never really sell because the market's always going up. That's why would you sell? So we divorce ourselves from that. We say you want to buy stocks when the market is rising, when the broad market is rising. It puts the probabilities in your favor that your stock is going to go up. And we want to see that market rising right up to the point we open the trade. We call that follow through. We don't buy when the market's in downtrend or falling. If the market doesn't follow through the day I'm trying to enter the stock, then I don't buy. I want everything running my direction right up to the point where I hit the order entry key, because that's when I lose control. Right? Then I'm just responding. After I buy the trade or enter the trade, I'm responding or reacting to what happens. So that's the when to buy. I want the market to be rising. I'm going to buy rising stocks in that rising market. And again, right up to the moment I make the purchase, I want the stock to be moving higher too. So we're going to favor stocks that are in that rising price pattern, but also driven, supported by rising and positive earnings per share, right? That there's some fundamental strength behind that stock, because that's what drives sustainable price trend. On the when to sell, well, you need to determine that before you enter the trade, right? You ought to know what your selling criteria is before you get in. That way you can also size the position correctly so that you define your maximum risk. Why would you ever enter a trade not having any idea how much money you're putting at risk? unless you think you're putting it all at risk. Right? Well, we don't like unlimited risk, so we want to know what that risk is going to be. We also want to consider what adjustments we're going to make to lock in gains and to further limit risk from our initial stop loss, right? So our objective here is to make that risk smaller and smaller and to lock in gains as they accrue. All right, so we put that all together into this systematic approach that you can do in just 10 minutes a night. Again, anytime when it's convenient, right? So I want to spend the rest of the session here walking you through this process and show you that successful investing doesn't have to be hard, right? Now, without data-based analysis, we can make it that way, and we're kind of driven to do that as human beings, but really that's on you, right? And I also would put in my disclaimer here that, remember, this is an overview, right? So I don't have time to go into all of the details, but I think I can give you some ideas on how you can improve your own game, at least in the short term. All right, so when to come or when to buy. We want a rules-based indicator to indicate what the market's doing. Not what it's going to do, what it's doing, right? Predictions are bunk. One of the questions we had earlier when Glenn was talking, what do you think is going to happen? What's going to be the leading market next year? Well, you can formulate your own idea, right? Your own prediction, if you will, but we never act on our predictions. We act on the evidence, the data. So if you think that the Australian market is going to outperform next year, then you look for signs that the Australian market starts performing before you would take a position. Make sense? So we're looking for, in our system, we're looking for that green light in the price column. And these are kind of the base level indicators. I need to see that green light because to get that green light, the price of the VectorVest composite has gone higher week over week and day over day. And the prior light was not red. So the price is rising, at least in the shorter term. We also want to make sure that the MTI is below 1.5 for the US and the EU. Right? Why? Well, because that's the topping threshold, right? So if the MTI is below 1.5, go baby go. If it's above 1.5, you need to make that decision of, am I going to be a little more aggressive and continue buying in? In Canada, we use an MTI value of 1.2, Canada and Australia. So same rules, just different price threshold or a data point threshold. And we're always looking for the market follow through. So particularly when you're new to the system, right, there's a lot more going on in the market timing system. Glenn went through some of that today, right? So we do a daily color guard report where we give you all of those nuances. But depending on where you are in the curve, if you're just starting, make it a more binary choice. Did I have a green light? If I had a green light and the MTI is below 1.5, I'm going to look for a stock to buy tomorrow if it follows through. That'll keep you on the right side of probabilities and you'll do well over time. Yes, there are some things you can look at that'll improve on that basic system, right? By recognizing when you're nearing turning points. But you'll find success either way. Once you get the basics down, then you can do the value adds. So the green light, we're looking at the price column, whatever market, right? When this price light and that data cell has a green square in it, that's the green light buyer signal. And I can come right across and I can see that the MTI is at 1.34. So it's okay for me to be buying stocks at that basic level. Looking at the market timing graph, here's the MTI. Now, remember, Glenn talked about this bearish divergence. Well, that's a value-added nuance, right? So I can see that the MTI is pulled back below 1.5. I'm getting a green light. At the base level, I can start looking for a stock to buy. If I'm more nuanced and I recognize that I've got this bearish divergence, then I can incorporate into my system that I would want to buy defensively, maybe take the half position sizes, right? Be more risk averse. So let's look at the market timing graph itself. Let's do this real time. Here's the market timing graph, and let's put on, see if I can, hang on a minute here. It flashed back on me. That's what the problem is. Try that again. There we go. I'm going to take off the MTI here, and let's just put on the green lights. So every time you see a green light or a green triangle on this graph, you had a green light in the price column. Anytime it changes to yellow, then you either had a yellow or red light in that price column. The red triangle is our confirmed down call. But what I want to show you is the correlation. When I'm getting green triangles, the market's rising. When the market starts falling, I stop getting green triangles. So that's why I want to use that signal as an indication that the market is rising and is in continuation. Of course, you're going to get to a point where you have the last green light, and you never know the last green light's the last green light. So I recognize that when I get to those topping levels, if I just slow my roll, if the market does roll over, then I have less risk exposed. I also can limit my exposure by only buying 1 or 2 stocks at a time on every green light instead of buying 10. Right? So in our paper portfolio, that's what we do. We buy 1 or 2 stocks at a time. We're looking at green lights, and we buy defensively when we see signs of a turning point, and we buy more aggressively, particularly when we're coming off the lows into uptrends. Take a look at your own portfolio performance and see if you see the correlation between what the market is offering and what you're wringing from the market, right? I wouldn't expect my bullish portfolio to do really well in that pullback. We're off of the high here. We came back for the retest here, right? So currently that paper portfolio is kind of moving sideways. Well, that makes sense. The market's kind of been moving sideways, right? There's correlation there. If I see this rally happening and I'm not making any headway, then I might want to look into what am I doing? Why am I missing that? Am I following my rules? Right? Essentially is the question that I want to ask. All right. This graph is from a couple days ago, and I did it this way because one of the concepts that I posed was that we want to buy when the market is up and following through. Well, here's a day when the market was up, but the market sold into that morning rally. I want to avoid that. I want to avoid when the market sells off. What I want to take advantage of is when the market's up and keeps running, that's the better entry. Yes, it could fall tomorrow. It could fall this afternoon. I can't know that. But up to the time that I pull the trigger, I want to see that the market's continuing to rise. All right. Next, we're going to use the power of the VectorVest system to find stocks that have high VST scores broadly and buy them in that rising market. We're looking for persistently rising price, persistently rising earnings that are positive, and price that's following through. Now, I don't have time to go through the whole VST system, right? But let's look at this. I have an example here, a chart, right? Bottom left, upper right, smoother the better. The slope of that line, kind of a 45-degree angle. Earnings that are positive, that are continuing to move higher. That's the idealized setup. Yes, the stock has pullbacks. Yes, the stock has consolidations. But when the stock is in uptrend, hitting higher highs and higher lows, that's when I want to make my entries. Right? How do I find them in VectorVest? Well, it's really simple. Now, you can use the Unisearch tool, right, as Glenn demonstrated in his special presentation this week, right? If I can get the program to come up again. Bear with me. Right, but we're going to keep it simple. We're not going to use the Unisearch tool, and I actually would suggest you not use the Unisearch tool because you learn a lot of things by looking at the graphs. So let's just start in the stock viewer. Top VST stocks, right? These stocks have the strongest combination of upside potential, safety, and current price trend. Glenn talked about CI in the strategy. These have some pretty good CI scores as well. We have all these other data points, and you can cherry pick. If I just hold my control key, I can cherry pick on those other data points, right, and eliminate them from consideration if I want to. But what I want to do for this exercise is just take a look at the top 10 stocks. Let's pretend I'm looking for a stock that I want to buy. I'm looking at a graph layout called VectorVest Simple. I'm going to take off the RT indicator. I'm going to take off the VectorVest stop price, and I'm simply looking for stocks that are going bottom, left, upper, right, smoother the better. SMCI, I notice is doing that, although look at the slope of the line for SMCI, so that's going a little parabolic here and so overextended. But ultimately, just let's start with, do I like the graph pattern, and do I like the earnings pattern? I'm going to scroll through these. I think there's 20. I'm going to scroll through them real quick just to demonstrate how easy this is. You either like it or you don't. If it's a maybe, no. So you like it. Do you like it? Do you like it? I'm giving you about 3 seconds, because if you're looking at it for longer than 3 seconds, you're trying to convince yourself of something. This is the process that we go through. We just look at those stock charts, and the ones we like, we save for further examination. Those we don't like, let them go. So you write down the symbols that you like. Right? Some you won't. Some you go, wow, okay, it wasn't a nice uptrend, but it hasn't gone anywhere for 6 months. It's a no. Right? Or maybe their earnings are falling. So maybe you like the CRM graph. All right, well, let's look at it for support and resistance. Is it near a resistance level? No. If I look at 3 months, I would like to see it take out that prior high, right? It pulled back and it's at least moving up off of that low. Let's see if we can take out that prior high, right? That easy. Here it is in Canada. Go to the stock viewer, top VST stocks. Now, I might in Canada, by the way, is just make sure you have enough average volumes of these guys, depending on your account size, which has implications for the trade size of your account. So just make sure you have enough average volume that you'll have some liquidity, but just looking at the graphs, the exercise is the same. Either like it or you don't. Right? By the way, we try to avoid gapping price action. We want to see if that thing continues to follow through. So we don't buy the gap, we look for the follow through after the gap. Right, but just doing that little 3-second look, you either liked it or you didn't. We're very visual beings, right? You have an intuitive sense of whether or not you like the graph pattern. Choose the best ones. They're not all going to be picture perfect, ruler stocks, bottom left, upper right kind of thing. But some will be obviously ugly. I'm calling Payfair obviously ugly relative to, right? I'm looking at these other stocks. I'm going, well, yeah. Why was I even looking at that other one? Okay, so that's VectorVest Simple and how easy it is to go through any list of stocks if you run the search that Glenn did in his presentation. You run any search in the VectorVest system. Look at the graphs, bottom left, upper right, smoother the better, driven by earnings. That's the successful investor approach. So that's what we've been doing in our sample portfolio. We put them into a watch list or just write down the symbols, watch them at the next market's open, and make sure that they continue moving higher. So we just had a green light, right? So let me go to my watch list viewer. I was looking to enter a position on yesterday's market. What did the market do yesterday? I'm still in Canada, sorry. Here's the VectorVest composite from yesterday's market action. This was, if I drag a little lower, right? So it opened to the downside, tooled around here for the morning, didn't get back above the prior day's price action here until 2 o'clock in the afternoon. Well, I was done and gone by then. Right? I was doing meetings. So I didn't take a position yesterday, but I was prepared to, had the market instead opened to the upside and followed through. What was I looking to take potentially? Well, here's my list of candidates. As I find the watch list, these guys are on my hit list. And my question is, right, who's moving, who's open to the upside and following through and making the best moves? And that's the position I'm going to take. I'm being more risk averse, so it's going to be only 1 or 2 positions, right? Graph them all. Do they meet the test? Actually, what was that first one? That didn't meet the test. Must have been a carryover, right? Here, this would be a much more aggressive test. I have this resistance here. I would kick PLAB out. I'm not sure that I like that now that I'm looking at it again, right? But that's the process of buying the stocks. When am I going to sell them? Well, it's very easy in the system. Let me get back to my slides here. We sell our stocks when they get a sell recommendation within the VectorVest system, right? The sell rec it's a very prudent indicator. It looks at the 65-day moving average of the stock, the 13-week moving average, and we make an adjustment to that stop loss for the fundamentals of the stock. So stocks that have strong fundamentals, we actually give them more room to breathe. We move the stop away from the price action. Those that have weak fundamentals, we actually tighten the stop to get you out quicker in an adverse move. That's one of those fundamental concepts between the aggressive and the prudent investor. So we use the recommendation equals sell as a very prudent methodology. So we're going to use it to set our initial line in the sand stop. Then it becomes a mental stop, which means the line in the sand stop is put on with the brokerage. I've defined the max risk for this trade that I'm willing to accept. If the price touches that line, I'm out. I don't have to think about it because it's already on the system. As I track the performance of the stock over time, then that VectorVest stop price becomes a mental stop. And then as I build profit in the position, I'll use some secondary methods to capture gains. The primary one that we use is never give back more than half of the gain once you get up about 10%. There are a lot of different ways, different methodologies, even within VectorVest education, of capturing those gains. But the principle is we don't want to watch a winner turn into a loser, but there's a threshold of how much latitude you have to give the stock to move because they don't all just go straight up. Right? You get 3 or 4 days of up, then you're likely to have a day or two down. Well, if I'm trying to hold this position for weeks to months, I don't want to have a 2-day sensitivity. All right, so if I was going back to my watch list here, and I was going to take a position in one of these guys, it's fine. FTAI, right? Had a nice follow through day. So maybe I took a position on that. When I took that position, I went to the brokerage and I set a stop loss at 47.25. Current price is at 56. Right? Typically that threshold will be 10 to 15% away from the current price action. That gives it enough room to have a little pullback, right? And typically, technicians out there, we expect a pullback somewhere about midway of the prior move. Gives it plenty of room to have a pullback. I don't overreact. I know that if it pulls all the way back to the VectorVest stop price, right? If it pulls back to that level, I'm not going to lose more than 1 to 2% of the portfolio value on that trade because I sized it properly. So if I have a $100,000 portfolio, I'm only going to buy enough shares so that if it pulls back there, I'm going to lose not more than $1,000 to $2,000, depending on where I want to put that percentage. That's how I control the risk. Now, if I'm only buying 10 equally sized positions and buying them one or two at a time, you can see how I'm limiting the risk exposure of the portfolio to an adverse market move or one of these stocks falling out of bed because it has an earnings report that's coming up in 2 weeks and it misses. Now you don't have to be Johnny on the spot, getting ahead of the curve, selling the stock because it had 2 red days only to come out, or even 5 red days only to come back a week later and find out that you were schmucked because it went up from 45 up to 55. It no longer is a matter of you being right or wrong. It's, did I faithfully execute my trading system? That becomes the arbiter of whether or not it was a good trade, not what the outcome was. Hopefully you can see that this is no longer than an emotional roller coaster. It's simply a matter of executing the plays. All right, so practical example here, as I'm getting close here on time, but if I go to the portfolios, let's look at trade history here. So here's the trade history of this portfolio that we've been doing over time. I'm going to sort it by closing date. Most recent trade I closed was this CrowdStrike trade. Let me show you how it worked. And look at this graph. So we took our position on December 11th. Let's find December 11th. And remember, the market peaked when the topping levels on the 13th, if I recall. The December 11th is when we took this trade. If the hard right edge of this graph, that's what the chart looked like the time we took the trade. Bottom left, upper right, smoother better, driven by rising earnings. As the trade progressed, right, initially, I'm going to zoom into 3 months here, if it'll let me. Right, so there's where we entered. I'm going to take another horizontal line, put that on the graph, find December 11th again. That's where initially we had our line in the sand stop. Right, there was a little bit of a gap here. We might pick up a little bit of support here, but it could have fallen all the way back down to this level before I would have stopped out of the trade. Happily, however, it made an advance. Once I get up to a price of 272.09, I've made 10% based on my cost basis of 247. So I call that being in the bonus round. So once I get up to 272 or higher, see if I can just advance my cursor here. 272. Oops, I think I just missed it. That's where I made my 10%. See how the price actually pulled back? One of the most common things we talk about in the successful investor coaching is holding a stock through this, because half of the room is in real life was saying, are you kidding me? It just put in a lower high. It's had 4 red candles in a row. Get me out of this thing. Well, okay, you got out of it and then you missed the whole next move. So what you'll end up in your portfolio is a bunch of small losers because you're overly sensitive to adverse price moves. I call that playing with scared money. You're more afraid of the loss than you are of the hope of the gain, the draw of the gain. So price makes an advance. It gets to that 10% threshold, right? So that's when I start employing. I use the Fibonacci tool just to draw the line. But that means on that day, I moved my stop loss up to here. Don't give back more than half of that gain. As the price continues to rise, I keep raising the don't give back half threshold. So then it made it up to here. Price pulled back, never took out, half of the gain, makes another advance. Great. Makes another advance into a gapping price action. And you can see that the market sold into that gap. So what we do on gapping price is we put a mental stop under the gapping candle low. And if I get it closed below that gap low, it's filling the gap, right? I'll put a hard stop underneath the low of that triggering candle. And you can see I stopped out then the next day. Using that methodology, what am I doing? As I was moving my line in the sand stop higher, I was limiting my downside exposure and also letting the stock run, but putting a little tighter leash on it so that I could capture the gain. Often what will happen is the stock will consolidate sideways, just like CrowdStrike has done. Yeah, I got tagged out here. And if this takes off and breaks out, I'm gonna have to buy back in, and then I'll be really mad, right, that I got whipped out. Unless it breaks down, of course. And then I'll be happy that I got out and locked in so much of my gain. Well, you can't have it both ways. Put on your big boy, big girl pants here and make a decision that you think puts the probabilities of success on your side. You don't like the don't give back half threshold? That's fine. You don't have to use it, but you have to use a stop loss that defines the maximum risk in the trade. Right? If I'm a buy and hold investor, I'm probably not going to use that rule, right? Because I'm interested in staying in it for the long term. But now you can see that I have a rule set that I've devised that keeps me out of the way and me and my emotions, and is putting the probabilities on my side over time, over multiple trades. And so if I'm going to incorporate a rule for how to manage this stop and its adjustment, I want it to be true for 30 trades, not this trade. Now all I have to do is at the end of the day, I log onto the computer, I look at the trade, I go, oh, it didn't hit a higher high today. I don't need to make any adjustments to the stop. Close it out and move on. Rinse and repeat. Do I have an opening and do I have buying power? Do I have an opening in the portfolio? Well, what's the market timing system telling me? Should I be looking for a replacement? If not, log off, go for a walk, spend time with your significant other. Do things, unless you really love it, do the things that really matter to you. And it won't affect your effectiveness at all. All right, so that's the process. As I said, it takes on average about 10 minutes a night. Of course, if you have to find some candidates, maybe it takes you 20. You may watch the daily color guard report, which is another 10 minutes. Got it, okay? But the process of managing your portfolio, on average, 10 minutes a night. There'll be a lot of nights where you don't have to do anything, right? And you're doing it after hours when you can, if you want to think about it, you have all the time you have a lot of time to weigh your decision and make intellectual decisions, not emotional ones. Right? So when I do this, right, I usually log on to VectorVest. I look at the market timing system because that's what comes up first. Then I jump over to my portfolio and figure out any adjustments I need to make to my stops. If anything hit its line in the sand stop, the broker already took care of that for me. I already know if I'm going to buy or not to replace. And then it's simply a matter of jump into the program, find some candidate stocks. Wait for follow through on the next session of both the market and the stocks. No follow through, no buy. That stops me from pressing into a market that just doesn't want to give it to me. That process, this process, is the same whether you're day trading, swing trading, investing, or position trading as we are. Maybe instead of your when to buy signal, maybe it's the primary wave. Maybe it's an intraday signal or price chart pattern, a candlestick pattern on the VectorVest. I don't know. We teach many different methodologies, but the key is you have a signal that confirms for you that the market is doing the correct behavior. And then we're simply looking for follow through on both the stock and the market. All right, so I'm going to lean on Glenn here a little bit because I haven't had really a chance to look at the chat that's going on off to the screen. Any questions that we want to identify where you need some help? Because again, that was my directive, or my goal here was to help you get out of the box you might be in. So if you're struggling, is there anything that I presented here that is confusing to you? I recognize I might not have been able to give you all the detail, but kind of, is there anything we need to cover?
Yeah. Can you hear me?
Yeah, I got you.
Couple of big things I tried to answer a lot of the questions, but some of the questions were variations of what you presented. And I answered the questions in regards to you can vary a lot of different things. Hold on, Joey sent me something. You can vary a whole lot of things. And I liked what you did just at the end, whether you're day trading, whether you're swing trading, whether you're position trading. I think that answers the questions, but I want you to put a little bit more into that. And as you go into that, I also want you to talk about sizing the trades. Those two things, and I got a couple of other questions, but those two things, sizing the position, but the different variations that you can take along with what you just went through.
I'm not sure what you mean by variations.
So you're talking about it from strictly a successful investor, position trading. How do I use this, variations? Maybe not the DEW, maybe the confirmed call, maybe the primary wave, that kind of thing. Changing the stops, maybe not just using the VectorVest stop, and those different things, along with pricing. What's the word that I just said? Position.
All right. So let me try to back that up and make it kind of more universal in terms of the principles involved.
And that's where I guess I was trying to get to, but I just didn't say it right. I
so
don't
let's
think that
start.
Word means what you think it does.
Glenn's just quoting that because he knows I love that movie. Let's start with the market timing question. If we think of trends, right? Trends are defined in part by not only their direction, but also the duration, right? The time frame that we're looking, and their amplitude. Let me clean this up a little bit. So there's a short-term trade, right? So the shortest trend that we look at is the primary wave, the change of the VectorVest composite on a 5-day basis, week over week. It's the shortest time frame we look at. Why not 2 days? Why not 3 days? Well, because that interval is starting to get so short that there's going to be a lot of noise. There's already a lot of noise in a weekly signal, right? Just that weekly signal changes on average about 70 times a year. So, it's basically a week where primary wave go, right? So there are a lot of signals here. So there are a lot of fast reversals, and get over the idea that that was the wrong signal. That's not the wrong signal. It's driven by the data. The price either changed or didn't. You may not like that signal because it has more noise in that signal, right? It gives you more signals, and you'd rather have something that is a little more sedate. Well, the green light buyer is the great fit for us. When you think about the green light buyer, let's think about it in terms of clusters, not actual lights, because it's got up, neutral, and down. So there's a continuation component to that I really like. Not only did I get the first green light, but I got some more green lights showing me that it's continuing. So if you look at that, from how soon does it signal after the actual low, the faster signal or the more sensitive signal will give you a faster or earlier signal. But there's a trade-off. By being fast and early, it also will have more noise. Conversely, you go to the other end of the spectrum and you go to the DEW or the confirmed call. They're slower, and they're slower on purpose. You typically get further away from the actual pivot point, but it has a lot less noise. So depending on where you fall upon that spectrum, we've chosen the green light buyer or the green light buyer kicker signal as our go-tos for a successful investor. But if you like the DEW or the confirmed call, When I get the DEW signal up, that signal in that time frame is telling me now that, yes, the market is an uptrend. But do you notice from the peak to the down signal? Right, so the lower sensitivity also slows it down, signaling the reversal. So let's take the principle that we just talked about, saying, well, you know what? If the DEW signal is up, that's my longer term signal. As long as the shorter term signal is also up, I'm still getting green lights perhaps, or the primary wave is still up, then I know the short term and this longer term trend are still in alignment, are still intact. The market's still rising higher. I can continue to buy stocks. Right. So if you like to be more sure, quote unquote, sure of the trend, right? And all that really means is you have more evidence that the market is moving higher, then go to those slower signals, less noise. Now let's talk about the position sizing of the stock trades themselves. And I had a chart over here somewhere. So a couple things to think about. First of all, Dr. DeLito's guidance is that we not risk more than 1 to 2% of our portfolio's value in any single trade. It's not 1% stop loss, that's 1% of your portfolio's value. So if I have a $100,000 portfolio, the most I want to lose or put up to risk exposure on any trade is $1,000. If you have a $10,000 account, it's $100. Recognize that depending on how many shares I buy, I can take this same risk exposure, right? The price is currently at $56. My stop loss is at 47, right? $9 if my math is still good. That $9, I can make that, if I buy enough shares, I can make that represent $1,000, or I can make it represent $9. If I only buy one share, I can put the loss, the risk exposure in dollars and cents anywhere I want. So if you're afraid of losses, if you're risk averse, and you're overly sensitive to having any loss, buy fewer shares until you kind of work on that. Just buy a couple shares, keep the risk to $50 instead of 1,000. Prove to yourself that the system works, that you can trade this effectively once you get out of your own way and stop having a 2-bar stop loss on a position trade. Let the thing have some wiggles and see that, wow, actually, it does work over time. Yeah, I had some stocks stop out at losses. They were small because I have small positions, but I also had more winners than losers. So you know what? As I'm getting more comfortable, let's up the risk from $50 to 100 or 500, right? I'm working toward the goal of getting in my comfort zone, how the stocks work, how the trades work, so that I can be effective and get my emotional self out of the way, because that anxiety will lead you to make mistakes. If you're anxious that you're going to lose, you will move heaven and earth to get out of that trade. And 6 months back, you'll look back at it and go, why did I do that? Right? And it's usually part because the result would have been different had you not. Right? So that's kind of what we're up against. So how do I size this trade? Let me get out my calculator. If I have my $10,000 portfolio and I want the risk to be $1,000, well, actually, let me back up from there. Price is at 56.21. My proposed stop loss, stop, is 47.25 minus 47.25. I have $8.96 of risk exposure per share. $1,000 divided by $8.96 says I should buy 111 shares, round down. 111 times 56.21 means I'd have a $6,000 position. That's less than 10,000. Yes, it is. And that's fine. You'll have a little bit of excess buying power on the sideline, but you've limited the risk. And the limiting of the risk is more important. On the other end, I won't buy more than $10,000 of shares in this position because I don't want to overweight my portfolio in any one position. Because what happens? Inevitably, if you've invested in tech, the crash comes and it comes in a hurry and the whole dang thing gets wiped out at once seemingly. And all of a sudden you had 10 positions and your portfolio is down 10% in 3 days.
Can you say dang?
So, I hope I did.
No, I'm saying, can you say dang?
Yes, you can say dang.
Okay, I was just checking.
It's on the approved list. I asked George Carlin. He said yes.
Okay.
All right, so that's how we size the position. I think that answered your
Yep, and that
questions.
was Whit. Whit wanted to know how to size the position. I think that overall statement that you made and process that you went through is going to help a lot of people out there. A lot of people are on that whole idea of how to effectively size a position, and I think that turned on a lot of lights for a lot of people. And then someone is saying that there is a calculator that's out there that you can. Didn't you have one? Didn't we have one?
We did years ago.
Okay.
But you don't really, a simple spreadsheet will do it, or calculator will do it. You don't.
I might have to do a video on YouTube about how to size a position. I like that. It'll be a short one. Yeah. That might not be a bad idea.
Real quick, I just wanted to remind people who are members that if you wanted to take the course for free, VectorVest.com/TSIC to sign up there. Make sure you use your login information. Don't sign up as if you're purchasing it as a new user. All right. And those of you who are not members, if you become members, then you can still go to the same place to sign up for that free course.
It's free. Right? That's huge. Is that it's free.
Free is the nice price.
Yes.
But you know, that it's exciting to me because the more people I can put this information in front of, the more people we have a chance to help. And that's kind of why I get up in the morning.
I get up in the morning so I can go eat some bacon. But
well, there's that. Yeah, well, sure.
That's just me. All right. Let me reshare my slides real quick. We're at the end. Here we go. We're at the end. I don't know if we have any other questions. I've tried to answer. Ray's done a great job in the background answering questions as well. Fitness Solutions says, great review for me, Todd. Thank you. Great timing given our market. I think that the strategy of the week, along with the International User Group the day after, I think both things tied together did a good job of helping people in the current market's conditions right now. All right. So, man, that was, I don't know. Oh, that one? All right, so there you go. Joey's in the background. Joey is my handler because I don't know half the things I should be doing half the times. But
keeping you on the path.
Yeah, he is. He does keep me on the path. Australia numbers, Belgium, Germany, Netherlands, product support. I think we have the best product support in the whole dang world. I really do think so. Give them a call. You can always remember. You can go to our main website, www.VectorVest.com, and you can use our chat feature on our website as well. All right. So if you don't want to wait on the phones, you can go to the chat feature. We have several people in the chats to be able to answer your question. We also have more international numbers for Hong Kong, Singapore as well. So as you know, as I mentioned earlier, the recording will be available on YouTube immediately after the webinar. Same location in the VectorVest YouTube channel. If you have questions that you want, you can email us at support@VectorVest.com. Can you say dang? I know he said dang. I don't know if you can say dang. Hell, I say a lot of stuff. Hell, I just said hell. Gosh, dang it. I got to stop that. All right. So with that being said.
You just said dang it too.
Did I say dang it?
Gosh, dang it. That's what you just said.
Oh, gosh. I can't say it. Hey, if you're brand new to the channel, folks, again, please hit the subscribe button, hit the bell icon so that you'll be alerted to stuff that's going on the YouTube channel. Please do that. If you liked the commentary today, hit the like button. All right. It lets us know that it was worth it for you guys to come by today, and it's a way of just saying thanks. All right. So make sure you hit the like button. Is there anything else we got to talk about? Hopefully, my boss says I did a good job. I'm glad. But the next user group will be by Rick again. I just was a fill-in, so I just hopefully I did a good enough job to fill in. I think we're done. When are the free classes? Go to www.vectorvest.com/TSIC. Hey, what was the first date? February. You showed the date. Todd?
I knew you were going to ask me that, and I got to pull up the calendar to find out.
Sigh.
Man.
Anyway, he's going to get that up.
Stand by.
He's going to get it up there. Good work on the sizing. Ron, I think that Todd did a great job, probably turning on a lot of lights for a lot of people in regards to sizing the position. February 14th. Thank you, Ray. Sigh. Lou, why are you giving the wrong information, Lou? Lou, you do this on the YouTube. Why? Why did you give the wrong answer? Sigh. It's all right. I still love you, Lou. I still love you. All right. It's the 14th. It's the 14th February. Hey, it's Valentine's Day. Oh, what a good way to say I love you with a free course. For free. That's for registration. No, it's February 14th. The question is when are the free classes? February 14th. All right. Todd, thank you for being here. Number one, thank you guys for having me. Number two, Joey, thank you for being in the background to do all of this. And Ray, thank you for moderating. I hope you guys have a good rest of your weekend. And once the video is up on YouTube, share it. Share it, share it, share it. Get more people involved into what we do here at VectorVest. That sharing helps us tremendously. And subscribing to the channel helps us tremendously. All right. So, Todd, what are you going to do for the rest of the day?
I'm going to go do farm stuff.
Well, I'm not doing that. So, all right, I'm not doing that. I think I'm just going to go home. I'm probably going to go to sleep. All right. So that's probably
have some lunch. Have some bacon.
No, I'm fasting lunch for 21 days.
Oh.
Yeah, so, all right. With that, folks, have a great day. Have a great rest of your weekend. Make sure you tune in on Monday on the YouTube channel. We have a live stream. I have a live stream at 12 o'clock. And then I'll also have the 6 p.m. video, which is going to be my top 5 weekly picks for the U.S. and for Canada. All right. Those things you need to support us on. Go watch them. Go support them. Go share them. Again, how do we get the slides? Ray, in the background, how are they going to get the slides? It'll be an email that goes out tomorrow. Man, look at Joey coming to the rescue. He doesn't always come to my rescue. A lot of times he throws me under the bus, but okay, I'm going to sign off. I'm going to sign off the Glen way. I should have let Joey do it. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii and praying for all the people in Israel as well. Odabu, bom dia, salam, shalom, namaste, yasu. Till next time, folks. See ya.